Okay, back to the cows. Wilingomini. The screen is clear, right? Everything on the screen is clear.
Yes, sir.
Okay, wonderful. That's perfect. Okay, now the first question, question one, dealing with accounting concept and equations. For 25 marks, 20 minutes, which I believe you took 20 minutes finishing it. Then 1.1, they are saying match the description in the column A with the word in column B. Write down only the letters A to F from column B next to the number 1.1.1 to 1.1.5 on the answer sheet, as you can see it over here on this side. So we can see that this is the answer sheet. Yeah, okay, the concept. Then now, which approach did you answer this question? Some will say that, okay, Mener, I start by reading column A, like they are saying business entity. Then I think to myself, what do I know about business entity altogether?
Yes,
So,
sir.
what do you know about business entity in general? Beside looking at column B. So you define it yourself. Then you go to column B and look for a definition that is closer to what you already know. Are we together?
Yes, sir.
So what is your understanding about business entity? These are the GAPS principle, right? Principles. So what do you understand about the term, the concept, business entity? What comes to mind?
Keep saying it's
Your not beside the one on column B. Just your knowledge. What comes to mind? What is an entity?
I don't know, sir.
Okay.
Financial affairs.
Entity, it's in simplest term we can say that it's a body, it's a separate body. Are we together?
Yes, sir.
So a business entity means that it's separated from the what? The owner. The business, it's a body on its own, it's an entity on its own. Are we together? So
Yes, sir.
now we can look now in column B. What is closest to that? Because I try simplifying it and putting it as simple as possible. So now, what do we see here on column B with regard to entity? What can you say? It's closer.
The one for number F, financial affairs of a business are kept entirely separate from the financial affairs of its owners.
So it's assets, financial affairs, yes, of the affairs of the business are kept entirely separated from the financial affairs of the owners. So that one is correct.
Its owners.
So it's F. Did you get that one right when you were doing it?
Yes, sir.
Okay. Then historical cost. I know this one, it's always easy for students.
Historical cost number C. All assets are recorded at their cost price.
So it's C. Okay. For the sake of time, okay, we are good. That's correct. Then matching principle.
Income and expenses must be reflected against each other in the same financial period.
In the same. What does that mean in depth? In your understanding, I do agree with you. You are saying that, which is A, income and expenditures must be reflected against each other in the same financial period. What does that really mean?
When
Remember, in accounting, we record an income, or we have these two: expense and we have an income, right? So when do we
yes,
record an expense? When do we record an income? If you come to me, you offer a service. Are we together?
yeah,
It doesn't matter what type of a service. Let's say maybe you are doing house deep cleaning. You are having a company that is cleaning the house. You cleaning everything, the sofas, everything. You leave the house clean. How together? Now you come and do that deep cleaning on my
mhm,
house, or on my business. You are cleaning the offices. Let's say you are cleaning offices. Okay, you have a cleaning company. You are providing a service of cleaning offices for companies. Then now you came to my company and you clean my office, which cost you calculated. Then you gave me an invoice with a total of, let's say, 2,500 for that day altogether. That's how much you charged
yeah,
me altogether for cleaning my offices. My office, maybe it was one hour. You cleaned it within 1 hour. Then you charged me 2,500. Okay, it's fine. Now I haven't paid you the 2,500 because we have been in business for so long. But you know that, okay, I'm going to pay you maybe 2 months after, or yeah, this is the month. I'm going to pay you after 2 months.
that's
Okay. So now the question is, this 2,500. This is month one, month two, month three, which I said
right.
I'm going to pay you on month three. Are we together? So now my
Yeah.
question is, when do I recognize an expense? When is this 2,500 an expense to me? Is it an expense now in month one when you were providing the service, or will it be an expense on month three when I am paying for it?
It's gonna be an expense on month three when you're paying because the owner is gonna be paying and then the other person is gonna be an income to them.
Okay. Now this is why I was asking that, do we really understand this? This A is saying that income and expenses must be reflected against each other in the same financial period. What does that mean? In simplest terms, that means that if a service have been rendered now, we recognize an income or an expense at that point in time when the service was rendered, or a product was given, was exchanged, now together was traded.
Yeah.
So at the moment a service is rendered or a product is given, that's when we recognize. So in other words, the definition of expense, the expense could be paid expense, or an expense could be payable, isn't it? So
Mm.
we, well, what do we mean by payable? That means we are still going to pay it, but it's an expense although we have not paid it. That's why when you are doing the income statement, you add the payables. If there's money that is belonging to this month, to this year, and we are going to pay it next year, you add it on your financial statement.
Mm.
Okay, that means by so doing, you are applying the matching concern, the matching principle. Okay, this is what that means. Okay, I feel like we at times as teachers we don't discuss these gap principles with students in depth. Okay, then they go now on going concern. Going concern, it's practically defining itself. Going concern, to be concerned about going, which is going is moving forward, to be concerned of the future, to be, yeah, so it's around there. So which definition in column B that matches going concern?
Number D, financial information prepared with the understanding that a business will continue in the future.
Number D. So we have used C, we have used A, we have used F. So now we are left only with B and E. Then we are looking for prudent. Which one is prudence?
It is financial information in the financial information is recorded conversation conversative manner. Number B.
What does that mean? Do you understand what you are saying? It's good, it's
Now, sir.
right. But now, as an accountant, remember, the future of this country is in your hand. So, we are preparing the leaders of tomorrow. So, you need to have the understanding of what you are doing so that you can recognize the value of what you are learning. The CAPS curriculum is very rich. Are we together? Yet,
Yes,
but
sir.
if you don't study to understand the concept or the content that you are taught, so it will be it's more like you are having a very powerful weapon, but you are not using it. You see, and some of the things that you are learning now in grade 10, you will be shocked to find out that people that are starting businesses now, older people that they are people that have established themselves in their careers, but now they decided to branch into business. Now they are starting businesses and they don't know this knowledge, and people are charging them huge amounts just to go and teach them how to do a business plan, which you find in a grade 10 textbook, just to tell them about this concept, basic concept, you see. And people yet are paying for
Yes.
that. People will subscribe and pay monthly subscription so that that person can guide them in preparing these books, in making sense out of this concept. So now you need to know this concept so that you won't have to pay them for them later. Maybe you could make money out of knowing them, just knowing them, understanding them. Okay? Then they are saying now
Yes,
the
sir.
financial information is recorded in conservative manner. What is a conservative manner? A conservative manner, that means now it's whereby we are not giving the investors false hope. Are we together?
Yes, sir.
Are we together? So now it's in other words, we are maximizing the possible losses. Are we together? We are keeping, if there's a possible loss, each, for example, let me make an example to explain this one. If there's a possible loss, let's say I don't need to write it down. You are you are selling on trade it, right? Remember, if you are selling on trade it, there are sales. On sales there are cash sales. and they are traded
Cost.
sales. Okay, so now people that have bought on traded, they automatically become your debtors, right? Okay, but now what is expected from those debtors? Some of the debtors, when the time comes, they will pay, but some will become bad
Debtors.
debtors. Are we together? Some will be written off. Are we together? So now we are saying now,
Mm.
but because you have been doing this business and now you can anticipate, are we together, how the future using previous business accounting books or previous experience. So now from your previous experience, you can see now, you can say, okay, out of these debtors, let's say that these traders, they bought maybe stock for 150. You can say that in that 1,000, 150,000, I should open a room for disappointment, that I may not get 30,000 back from that amount. You see,
Yes, sir.
what do we call that? The debtors didn't say that they are not going to pay, but you are saying, okay, now let's keep this 3,000 aside, 30,000 aside, and say this is provision. We are now making provision for what? For bad debt. What does that mean? Making provision for bad debt, that means I'm saying now there's a possibility that I may not, out of that sale, I may not get back the 30,000
1,000.
altogether. So
Yes.
now I'm maximizing the loss, so that when that happens, it doesn't shock altogether. But what I cannot do, even if there's a client that has been calling me and saying that, hey, Mr. Maths, what we want to join your classes. I have 10 students here. We are going to join your classes next year, or we are going to join your holiday classes. Are we together? I want to record that on my books. You see, although yes, it doesn't matter how much I trust that person. Are we together? Because now by doing that, remember, I can be disappointed by the person and uh not registering those kids that he promised. Are we together? So now my books
Mm.
will be a mess, and also I have created a false hope. So which means if I have invested now, they will not trust me. They will think maybe I was trying to make them invest in thinking that my business is having a lot of clients or is making sales.
Yes.
So now what do we mean again? We come back to what we meant. We were just trying to explain prudence. Yeah. So when we are saying to be prudent, we are saying that okay, the business or the bookkeeper is having they need to make sure that they are, if there's a possible expenses that can take place in the future, they need to account for that altogether. But now not possible incomes, so that the investors may be aware of if future threats that may possible future threats altogether, but not bribing them by possible future incomes. Yes, they can do future incomes when they are doing the budget and stuff and stuff and stuff, but in other books, I don't know. That's why you will find that in the income statement you will have what we call the provision for bad debts. But I will still explain that in depth when we have time. So that's how you take the first 5 marks. So we look into the second question, accounting equation. So in the accounting equation, what are they saying now here? They are saying the information below relates to Maputi stores. Transactions were taken from the February 2024 records. required. Analyze each transaction according to the table in the answer book. Indicate an increase with plus and a decrease with a minus, and no effect with zero. They have
with
made an
zero.
example for you, an example that made an EFT payment to Lekaside stores for 500. So who's making this payment? It's us, the business. Ne? Is the Maputi stores. We are the Maputi stores, right? So
Yes.
as the Maputi stores, we have made this EFT, we have made the payment. Are we together? So now in EFT, if there's an EFT, AFT is a payment. So the first thing that you need to look at, which accounts are affected. Which two accounts? You know that if I made a payment, EFT it's more like cash. So bank right there is affected.
Mm.
Are we together? Now you
Yes.
ask yourself, okay, I am making a payment, which means I'm taking money out of the bank. Why am I taking money out of the bank? Am I paying, or what am I buying? You see? Now it goes
You are
back to
paying
say
for station.
stationary. Oh, stationary is also
No,
an
wait.
account. So now you can see that, oh, these are the two accounts that are affected. Again, in knowing that, you need to know we have what we call the Jesus of accounting. By now you know Jesus of accounting, right? Don't you know?
Uh,
Jesus of accounting, which means like, why am I saying it's Jesus of accounting?
the credit side and the debt.
Because accounting revolve around this knowledge. So now let's break it down. We have what we call adhesive, a mnemonic that is called adhesive that I use, a mechanism adhesive. Because of your level of brilliance, your level of intelligence, you already know that A there is representing what? Assets, without me telling you. Ne? And D is representing what? Drawings. Okay. Okay. E is representing what? What do you think E is representing? Which account? Nyeleti?
Isn't it owner's equity or
E.
liability?
Okay. E is expenses. But I appreciate the try. Okay, it's expenses. Okay. Then we come to seal. Now to seal we are seeing C. So that means C is representing capital account. Any capital account that you see belongs here. Any income, I is the income account. So there's a lot of income accounts. Then L is a what? Is a liability account. Okay. Now this means that at the seal, all these types of account are increasing on the debit side and decreasing on the credit side. Under seal, capital income liabilities are increasing on the credit side and decreasing on the what? On the debit side. So if you
And
understand this,
right.
now accounting will be very easy for you. Ne? Okay. Now, how is this going to help us, Menier? Let's use it on this example. Now we are saying that what has happened here? We have paid. That means we have taken out money from the bank. And what is a bank? What type of an account is a bank? Remember, when you are doing your balance sheet, bank is under cash and cash equivalent, which is a current asset. Do you
Right.
remember? Ne?
Yes.
So now that means bank is an asset account. Bank is an asset account.
Asset.
And where are asset decreasing? Are decreasing on the traded side. That means bank
Right.
will be credited by that amount, by that 500. Okay. Then now, okay, we come to stationery. But now, because of your level of genius, of intelligence again, you already know that if the other account is credited, that surely means that the second account will be debited.
Yes.
Are we together?
Yes,
But
sir.
now we can explain it here again. What is a stationery? When you are buying a stationery, you are buying a stationery to use. It's something that you are buying to use, which is classified as an expense. Are we together? So stationery, it's an expense. So now when we are buying more stationery, that means we are adding to the stationery. We have maybe bought stationery at the beginning of the year. Now we are buying another stationery. We are adding to the already existing stationery, which means we are adding the expenses, the stationery expenses. So according to Adesil, where are our expenses increasing? Which side? According to Adesil, I'm asking. We said expenses E is on Ade. So if it falls on Ade, which side is it increasing?
And
On what?
it's increasing and
To increase it, which side is it positive? Is it positive on the debit side, on the credit side?
the debit side.
On the debit side. So which means we are going to record this 500 this side. So that's how you know which account to be debited. So you can see now they have debited stationery, they have credited account bank. Are we together with that amount? Okay, and that is affecting because bank is an asset and the assets are decreasing, so hence you are seeing negative on asset. Now when it comes to owner's equity again, we need to explain something here. Which accounts goes into owner's equity? It's easy to understand to know assets because you know them from balance sheet. But now when it comes to owner's equity, if something is an income, goes there. Capital, account, income account, drawings. Are we together? And expenses.
Yes.
All these are going here. But now, drawings and expenses, if they are increasing, they are going to show here negatively because they are having a negative effect on the owner's equity. I normally say to students that take your owner's equity as your pocket. Are we together? Or as
Yes.
your wallet. Let's say now, if your expenses are increasing, is it a good thing? If your landlord is increasing rent for you, are you going
It's
to
not a
enjoy
good
that?
thing.
No.
No, sir.
So which means it's going to affect you negatively. Are we together? But if the incomes are increasing,
Mm.
you are also rejoicing. Are we together? So
Yes.
now when it comes to anything that is an expense, remember drawings and expenses. These are expenses. But now the drawing one, it's a special expense. This one, it's an expense done by what? By the owner.
Yeah.
So that's a special. Actually, it's an expense, but it's just special because it has been done by the owner. Okay, so there it is. That's why now they said they use it like this. So you can see now that the owner's equity was negative because stationary it's an expense. Our expenses increased, and assets they were negative because our asset decreases, which is bank. Now let's go to the transaction 1.2.1 and analyze it. So 1.2.1, they are saying now this is a transaction that they want for us. Received 600 from A April, a debtor in payment of his account. Now we received 600, we received money, so bank there is involved. Are we together? What you ask yourself, are we adding to our bank account? Are we receiving? Or are we taking money out of the bank? That's what you need to ask yourself.
We are.
According to this transaction,
Yes, sir.
are we receiving money or are we taking out money?
We are receiving money.
So which means our bank, we are adding to our bank. And you already know that your bank is an asset account. So now if you are adding, where are asset? According to Adesil, you always go back to Adesil. Then when we get to Adesil, we know that, oh, if bank is an asset, so that means it will be debited. Are we together? Because now we are adding to an asset account called bank. So account to be debited for that transaction will be bank.
Bank.
Okay. So they have already given you the account credited. Again, if they didn't give you, you were going to read the transaction again. Okay, this money that we are getting, we are adding on our bank account. Where is it coming from? And it was for what? And we are seeing that it's from a debtor in payment of his account. What is an account? It's a debt. So if a debt is paying, a debtor is paying his account, that means it's reducing the debtors control, because we have an account that is called the debtors. So our debtors are going down. Now why am I writing this? Because I want us to look at what is a debtor, what type of an account is a debtor. Because all accounts that you are dealing with in accounting, you need to know it's either it's an asset, it's either it's a drawing, it's either it's an expense, capital or income or liabilities. Whatever transaction that you may deal with. That's why I was saying that this now is the Jesus of accounting, because everything revolves around it, like the Bible revolves around Jesus Christ from Genesis to Revelation. Okay, so now we are saying, now we are seeing that this is a debtor. So what I want to know is that what type, and where do we record debtors? We record debtors in an account called debtors control. Now you will go back to your notes for balance sheet. You will notice that in your notes for balance sheet, we have assets. Start with assets, right? Because you need to know this in order to understand this. We have asset. Under assets, we have two types of asset: non-current assets, right?
Yes, sir.
We have the fixed assets and what? And financial asset, which is your fixed deposit. Are we together? We have fixed asset or tangible asset and a non-current asset. Then we have what we call current assets. And under current asset, because there are many, maybe let me list them there. You have what you call first inventory.
It's the inventory, and what else? What we do?
Is my inventory correct? Is the spelling right? I don't think so.
Mm. I forgot the spelling.
Okay. If but as long as you know, inventory is the concept. As long as you know. Okay, it's inventory. And secondly, you have what we call trade receivables. Are we together?
Yes, sir.
receivables. What are trade receivables? These are the amount that you are owed. Trade receivable is made out of it debtors. Control is made out of
Mm,
e prepaid expense,
expense, prepaid expense.
is made out of accrued income. Do you remember those?
Yes,
So
accurate
which means
income.
what is common about these? These are all these are all not liabilities, but these are all debts. These people are owing you. So where I was go, okay, again we have other, we have what we
Cash
call cash
and cash equivalents.
and cash equivalent. So you need to know what goes into cash equivalent: bank, PT cash, cash flow.
So,
Yes.
so
Yes.
thereby,
But
what's this assets you forgot to write the fixed deposits.
this no, the fixed deposit is here.
Yes.
Yes, the financial asset is the fixed deposit. I said so.
But similarly, they make us write it in different places.
No. This is the same thing. Financial asset is the fixed deposit. If you said financial asset, and fixed deposit is the same thing. There are two types of non-current assets. Okay. Then also here you will have your matured fixed deposit, which will go also under cash and cash equivalent.
Okay.
Okay. But now we are not doing balance sheet yet. But now we wanted to know what is a debtors control. What type of an account is it? So we can see debtors. We see debtors under assets, whether they are current asset or non-current asset, but the fact remains they are assets. So according to ADESIL, they belong on ADE, and everything on ADE is increasing on the debit side and decreasing on the credit side. And now what is happening here? This data is paying off its account, which means it's reducing its debt. So now we ask ourselves, okay, if this one account is being reduced, because this person now is no longer owing us the money that he was previously owing us. Are we together? So now where are the debtors? And this is an asset. That's what we wanted to establish. So we ask ourselves, where are assets decreasing? They are decreasing on the traded side according to ADESIL. Are we together? So that's
Yes.
why now you see it as an account traded. I hope it makes sure.
Yes.
Okay. Then how much did we receive? We received 600. So you go and put that 600 here. We said that these are assets and these are assets. So both the accounts affected by this transaction are assets. So what will happen is that the other asset is increasing, which is plus, but the other one is decreasing, which is minus. The owner's equity is not affected. The liability is not affected. Did you get that part right as well?
Yes.
Okay.
Then it's the nation
Okay.
with operation trading.
So they are saying now donated goods
Mm.
to an orphanage amounted to 5,000. So since they have put the donation there, donation is an expense, so it falls under ADE. So also it increases on the debit side. But what have we donated? We donated trading stock, right? Because we donated goods, which is our trading stock. So trading stock, it's an asset account, because trading stock it's inventory. How to get it falls under inventory? It's an asset. So which means now our assets are decreasing, And where is our trading stock our asset are decreasing on the traded side according to other sale.
This
So we are having our trading
inventory.
inventory or trading stock. Then worth how much? 5,000.
So 5,000. Then on asset it's gonna be minus, and then on owners equity is gonna be minus also.
Wonderful. So you are saying that on asset, the asset are decreasing, owner's equity is decreasing, liability is not affected.
Okay.
Then now they come to this one. They are saying now sold goods for cash 30,000. The business applies 50% markup policy. Now you know that when sales take place, there are four accounts affected. First of all, we say we sold goods, so sales are affected.
Sales and
What are
cost of
sales?
sales
Sales are income account. Ne?
can
And now it
yes
depends now if sales are affected. Did we receive were these sales cash or were they on traded? That's what you ask yourself first. Sold goods for cash. So that means bank
yes
is also affected. And bank is an asset. Now the bank is increasing because we are receiving money. The sales are also increasing because we are making more sales. Are we together?
yes
Okay. We start dealing with these two first. Ne? But again, one will say that okay, after dealing with the sales, we can start by dealing with the sales first. The sales, what type of a sale? It's an income account. So where income falls are under sale. And according to sale, when do we incomes are increasing on which side? On the traded side. So which means we will trade it sales there.
sales. Oh, oh yeah. Bank then it's gonna
Then what will happen to the bank? The
be
bank is increasing, and bank is an asset increasing on the debit side. So we will trade it bank, debit bank.
bank.
By how
Then it's
much? By
gonna
the
be
30,000 that we
3,000.
received.
Then on asset is gonna be plus, and then on us equity is gonna be plus, and then on liabilities it's gonna be zero.
Zero.
Not
Wonderful.
affected.
Okay. Then now
Mm,
we said that okay, yes, many we sold, but what did we sell? We cannot just receive money from selling and we didn't sell anything.
so
What did we sell? We sold trading stock.
all goods
So we sold goods, which means our trading stock now is also affected.
good and cost of sale.
And trading stock is an asset. So if trading stock is affected, it's always affected on cost. Now, why is it
Yes, cost of
affected?
sale.
Because of the cost of goods that were sold. Cost of sales.
Sales.
Which we know that cost of sales, it's an expense account. So now we have an asset and an expense account. Are we together? What is happening to the trading stock? The trading stock is being reduced. And what is happening to the expenses? Are going up. Because now we are adding other expenses on top of other expenses. So the cost of sales is an expense, it's going up. So we go and see that okay, assets are decreasing. On which side? On the traded side. So we will trade it, the
On
trading
the trading
stock. We trade it, trading stock on the same transaction.
trading stock, and then we debit the cost of sales.
Debit the cost of sales.
Then
Now we
on
have to calculate the cost price of that because we are given the selling price. And
which
we
is gonna be cost equals to selling price
selling price, which is 30,000,
divided by
multiplied by 100
100
over
on 50.
150. You multiply with
Um,
what you want over what you have, right?
okay. Yes.
Which will give us how much? 20,000, isn't it?
20,000. Oh, good guess I did it right, but did it in a different method.
No,
Part of
no, there
mathematics.
are many ways of killing a cat. I don't know why we have to kill it, but there are many ways. Either way. Okay? Then now, your asset, are our asset affected? And how?
Yes.
Are they positively affected or negatively affected?
Positively as affected.
Negative, positive, or neg pause? What are you saying?
Positively affected.
Positive.
Positive.
But remember, trading stock is reduced, it's decreasing, and this is an asset. So our asset they are debit are credited. So if assets are credited, that means they are affected negatively. Then cost of
Oh,
sale is an expense, it's increasing. The owner's equity is affected negatively.
not affected.
So this is how you answer that question. So we'll call it a day. We'll meet again tomorrow. Please use today. Try by all means to answer this full question paper. Eh? Because when we start the session tomorrow, we are going to start straight. We are going to head straight to the corrections.
Corrections.
Okay.
Yeah, so.
Okay, then God richly bless you till we meet again tomorrow.